Good evening, ladies and gentlemen. Bonsoir, Neuchâtel. Welcome to this fourth edition of the Venture Talk. Again, in digital format. And today's topic is financing. Financing, presented by JP Vuilleumier, Director StartupINVEST, seasoned startup investor and coach, who will remind us the basic of financing. Financing, a very important topic for any type of institution at any type of maturity stage, startups, ramp up, scale up, sustainable business. It's for organization what oxygen is for a human. If we lose oxygen, we die. If your organization lose cash, it will die. Jean-Pierre will remind us the basis. Welcome, Jean-Pierre. The floor is yours.
Thank you. So, good evening, everybody at home, safe and secure. And I'm happy to be in Neuchâtel at Microcity. And of course, to find Mark here, which I had the pleasure, by the way, to coach a few years ago. And always good to come back. So, just about my person, I'm not going to read out my short CV here. I just want you to understand I've been working with startups for 20 years now in different functions. I have a background in finance, and since 2003 I'm the managing director of StartupINVEST, and also I'm back at InnoSwiss as a special coach for pitching, which is my hobby, and financial planning and assessment. So that's about me. I'm just passionate about startups. I just love to work with the smartest people in this country every day. What a privilege. It's wonderful also to be at the edge of technology, to see what's going to happen in a few years from now, in advance. So I'm very fortunate. Now, finances. You know, when I started 20 years ago, there was no startup ecosystem in Switzerland, almost inexistent, and there was not much money out there for startups. But it has improved dramatically. We have this very good startup funding report by the Startup Ticker, performed by Stefan Chiora and Thomas Heimann, which you must read it, you know, when you want to know what's going on in Switzerland with startups and financing. Those are the numbers. And you can see it has been really kind of flat, and now it's kind of, you know, exponentially improving. Not only the money, but also the number of deals. Now, this was published in January, but we all know what happened in March, right? And of course, we might ask the question as a startup and as an investor, what happened to investments in startups? We had the pleasure to welcome Stefan Chiora at the Startup Days a few weeks ago, and here his findings. You can see clearly that Q1, you know, a total drop, then the financing catched up again and is a bit below last year. Not that bad, right? And we didn't have big deals this year, as big as last year with 500 million for Get Your Guide. So this looks quite good. And what is impressive is that we have more deals that are closed. So a bit less money, but more deals. It means the investment amount, as we said, went down. The deal amount went up. But it's still, we are still, despite COVID, on the level of 2018. And that's not that long ago. Those are the learnings. No big deals, but we had many deals between 2 and 5 million. Of course, some of them kind of to help the startup overcome COVID as well. And so we can see that investors are really supporting their startups to go through the crisis, but also new deals, of course, are made. We have several new funds coming up in Switzerland, setting up in these difficult times, which is great. And of course, we have more and more people daring to do tech startups, which is fantastic. Now, before we go into finance, there's also this question, what makes a startup successful? And, key success factors, there are many studies out there. Whenever I ask these questions to executive MBA students, the guys that, study economics and finance and all these things, those are the answers I get. They are total useless answers, of course, because these people have no clue, right? And let me tell you what really makes a difference after 20 years in the business. It's really about you building up a network as a startup. Go to events, meet people if possible. You can meet them virally, it's not a problem. Get support. There's so many support organizations out there, and you will find the support organization that suits you. But if you get support, be open-minded. Listen to these people that help you. Adapt. But of course, at the end, you decide what you want to do. Also, it is important that as a startup, you learn to share. Not only your passion for your project or for your technology or your solution, also for your capital. This kind of notion, I want to keep the majority, is not going to help you in the long run. And, if you're a PhD from ETH, GPFL, University of Neuchâtel, you don't know how to negotiate. You must learn it the hard way. But you will find out everything needs to be negotiated when you have a startup. And then the last point, which is one of the very important one, is you must have luck with timing. There are a few companies that set up virtual event tools in October 2019, and today they are booming. It was the same like more than 10 years ago with Airbnb or with Uber, which are today, because of timing, are kind of down. So timing is absolutely important. We learned a first lesson today. I wish you did. It's not financing. Doesn't make a difference if you're going to be successful or not. So that's a good news. It's very important. We agree on that one, but it's not what's going to make you really successful. Now, it's needed, of course, and it will always be needed. You will always need cash. As Mark said, it's your oxygen. You need it, otherwise you're going to just die. And when we ask virgin entrepreneurs, the first timers, the ones that haven't done it before, you ask them this question, and there are PhDs and master students from those big, great schools we have here, technical schools. Those are the answers you get. They know grants. Maybe they live on one, on a fellowship or grant, and they know about business plan competitions. Well, I have to tell you, it's probably not the answer, right? But what could be the second best financing? Well, then they come up with, investors could give them money. And they like this idea of convertible loans, because convertible loans take away the fear of giving up shares, first of all, and secondly, they kind of delay the question of valuation, which is always, you're never going to find the right valuation anyway. Now, what could be the third best financing? Well, it's probably the real one. It's probably money from investors that want to be part of your journey, that will put money into your company and take the full risk just like you. But of course, as I said before, valuation is a big issue, and this dilution that you are losing, that you have to share with these investors, share the shares, right? We could say that. If you look at very successful companies, you will find out that those founders, most of the time, most of them, did not have the majority in their company anymore. When they do their exit, when they sell their company, successfully sell it to another, they might have between 10 to 30% of their company, and believe me, normally that's a good deal for them. So don't worry that much about majority. Majority, if you lose it, it doesn't mean you don't have anything to say anymore in your company. Because you see, when you onboard investors, you will have not only one investor, you will have many investors at some point. And I can assure you, they are not always having the same opinion. So if you play it cool, and if they understand that they need you for their success, then you should not have any issue. Well, but frankly, so far, all these proposed answers are not really helpful. There is a first financing for your startup. And believe me, if you don't put your money on the table, if you don't expose yourself as a founder with your co-founders, with your own money, nobody will give you their money. So that's the first financing. It's your money. And the best financing, frankly, well, it's paying customers. I know, for a biotech company, that's not obvious. But that's anyway a very different field of expertise. But otherwise, you know, customer money is kind of for free. So go out of the block. Talk to your potential customers. Get as much feedback as you can from day one. Don't be scared. Nobody will steal your idea because it's brilliant, so nobody can. It's protected anyway. So go out. Make proof of concept, not for free. Let them pay for it and earn your first money. So that's the correct answer. Now, if this is not possible, or if this is kind of delayed because you're not ready for a market entry, then of course we could simplify and present those three groups of financing. I ordered them by founders, then we have the business angels, and then we have this venture capitalists. Now that doesn't look like much, does it? Well, there's much more to it. You know, under the founders umbrella, where we talk about 500,000 plus minus, you have family, you have friends, you have fools. You know, I consider myself as a fool investor, by the way. You have foundations giving away money, you have family office, and of course, as we said, business plan competition. So there's a lot going on in that very early stage, seed stage called. And when you move on in your project over time, you know, business angel is the next category, but in there you have grants because you're more advanced. You get an economic promotion from the canton or even the federation. There is mezzanine financing. It's kind of a mix between equity and debt. And of course, you could even do crowdfunding because your product might not be ready, but if it's a consumer product, you might already be able to sell it on a crowd platform. Now the last resort, when it's, you know, later stage, not early, but later, it's interesting to talk to corporate VCs because corporate VCs might look for applications for their big company. But of course, at this stage, when you're entering the market or in the market, we should consider customer financing. We should consider negotiating with suppliers to save some cash. And we can have also mezzanine, classical bank. You see, the issue of not getting any bank credit line at the very beginning is you don't have a history. And if you have a history, it's going to be a bad one, not very pleasant. So they cannot rate you, so they cannot give you money. But if you're later, you might even get money from them. Of course, you also have the IPO, which means initial public offering. That's one way of exiting on one hand, but another way to finance growth and to keep control of the company. And we have initial coin offering, which, you know, all this Bitcoin and this, it has taken quite a hit because there has been so much fraud out there. So I personally do not like it that much for a startup. Now let's talk about business plan prices. You know, I listed a few, and you know, still one of the best, and it's the most established and the oldest one almost, is venture competition. This is really a place where you can benefit a lot. We have, of course, Venture Kick. In our beloved Ticino, we have Bold Brain. In Zurich, we have IE Lab, the 3P competition. And here in Neuchâtel, we have the prize Prix d'Innovation de la Banque Cantonale Neuchâteloise. Also a nice prize to get in this place here. Now, you know, when I look at startups and they tell me how many business plan competitions they won, I get a bit nervous. I would prefer them to tell me how many customers they have acquired. And also you have to be aware, and we have some examples of companies like Abionic, Swiss to 12, you know, in their specific year they won all of them throughout Switzerland, every prize, if it was not linked to their location, like BCN. But otherwise, so somehow sometimes, you know, these good projects come up and they just win everything and you're always second best. So, you know, think about it, consider it, of course, but, you know, it takes time to do that. It's an effort, and I prefer you talk to customers. Now, of course, and because you're a technology startup, you should talk about grants, you know, you should talk to InnoSwiss. Of course, you should talk to EU, because they have great programs, just figure them out. And they give away a lot of money right now. And, for example, all of you from Neuchâtel, you must not only talk to Microcity, of course you have to talk to them, but, you know, Promotion Économique, you know, they are here to help, so talk to them as well. Let me reveal a little secret here. You know, I've met so many startups in my life, and I'm really grateful. And I have many stories to tell. And it's this one about the grants. And I was invested in a startup, and the CEO, and we became friends over time. And he confessed to me that the grant he got stopped them from talking to their potential customers. And that they used the grant, you know, to be in their lab and to tweak the technology and the product, you know, like engineers love to do. And basically what he told me is, and I apologized for it because I'm an investor in his company, that he wasted some time here. So grants are nice, you're used to it as a PhD, and you know, if you do your company for the first time, but you know, be careful not to lose traction or to lose speed with those projects. That's just this experience I want to share. Now, we are on the verge of talking about professional investors right now. And you must understand what professional investors are looking for. Oh, you can't see that? Ah, here it is. Well, you know, if you have a professional investor on board, like a VC or a very sophisticated business angel as well, then you should be open for a new CEO. You know, if you're in this phase of growing, of, you know, scaling up, maybe you are not the right person anymore. And are you willing to give a chance to an external CEO? I think you should say yes to that. Are you willing to give a majority? We talked about it before. It's an absolute must yes answer here. Because if you're growing and to enter new markets, to hire more people to make all this happen, you will need a lot of money also for working capital to produce if you have hardware. You will not be able to keep your majority at some point, and you should not be scared of it. So yes should be the answer. And the last question you must answer before you talk even to an investor, professional one, is, are you ready to sell your company? Meaning, are you ready to give away your baby? So that's, sometimes kind of hard to do that. On the other hand, you might just be rich and do your next one. You know what we really need in this country? Are people that have done it, people that come back, people that share their experience with the new ones on the block. So, exit is something good. You're going to change, do something else. So don't be afraid of it. Now, how should you select your investors? Well, I strongly recommend you do your homework. Find out where to pitch. For example, at StartupINVEST. That's probably a good way to do, right? Also, find out which investors fit you. So don't send out these kind of blind applications or, just don't panic, basically. If your idea is as good as you tell me, then why should you be panicking and taking any opportunity you can? Make a short list of investors you would like to talk to. But before you talk to them, why don't you try to talk to a startup that they have invested before? Kind of figure out how they treat startups. Because, there are some very nice investors out there. Yes, they are. And there are some nasty ones. I'm afraid there are as well. So talking to other startups that have been invested by this specific company or investor you want to talk to is definitely going to be helpful for you. And then, if you have your network, as I said, success factor number one, networking. You have to build it up from day one. If you can get a personal introduction, that's like, it's opening doors. It's not a cold call. It's not a unsolicited email. It's a personal introduction. Imagine if I make an introduction for your startup to my friend who is an investor, probably a different story for you. I don't make many, so don't ask me to make one. I only make them very selective because it's about my reputation at the end of the day. Now let's talk about business angel clubs. You see, business angel in Switzerland have developed really nicely. 15 years ago there were a few out there. There was a guy here, one guy there, and then suddenly we had this kind of organizations popping up, like Start Angels, Business Angels Switzerland, very early, and lately we can observe SICTIC, which is focusing on ICT, of course, but which bring a lot to the ecosystem. So business angel clubs are definitely interesting because you might find 500,000 to even 2-3 million there, because they are organized, they syndicate the deals and make them together. The only challenge you have is to find a lead investor. And that's basically the guy who's going to make the due diligence of your technology, of your company, of your people, of your markets, of your IP. So I have to tell you, this is hard. But once you have him, then it will get much, much easier. Now, venture capitalists. A lot of people tell me they are bad boys. Yes, they are everywhere bad boys. But they're also very professional and very good VCs out there. What you must understand when you do your homework, as we said, there are funds there called closed funds, which means they have only a certain period of time to invest, like 10 years, for example. And then they have to exit all the companies. So it's kind of defined by time. And that can put you really in trouble if you get an investor on board that only has a few years left to support you. So check out the running of the fund, how long it still is up there for you. Then we have evergreen funds like the Venture Incubator of Switzerland, which is a fund that kind of never stops. So you will have less of time pressure with a fund like that. We have corporate VCs also in this country, of course. We have Novartis Venture Fund, Swisscom Ventures, to name two of them, but there are many others. I mean, most big corporations have somewhere today corporate innovation or a corporate fund, so you will find them. And there are, of course, the big guys, you know, the Blackstones and all this Goldman Sachs stuff, you know. That's, you know, let's not talk about them. They're for very late financing and pre-IPO situations, so, you know, it's not really such interesting for you right now. Well, we also have to, you know, think about what are investors looking for. Well, I talked to my chairman, Christian Wenger, which is a very active investor, very successful investor, is our chairman of StartupINVEST, and I asked him this question once, and he gave me one answer, and I really believe he is right, because that's also how I feel about it. It's all about passion. And you can feel it. And that's why live pitching is much more important than pre-record pitching. You know, pre-record pitching is not the same sensation. It's hard to feel passion in a pre-recorded pitch. You can stream it live, then you will feel the passion, or you can experience it live. And this person here, Roger Federer, is really, you know, shows us the passion for what he does. And of course, we all know he is successful. But there are other things, of course, you know. Is there market potential for your problem-solution fit? You know, it's always first the problem. Is the problem real, or is it just your problem? There is the solution. Is this solution technically feasible? Does it make sense? Do you believe that there is a match? And then that will lead to the market potential. Normally, what happens during a pitch is, first, it's all about the passion, as we said, and you can feel it immediately. And then it's about this market potential. For me personally, if I don't feel it immediately in my guts, I'm not interested anymore. You know, if they present me 100 total addressable market figures and charts, and you know, I don't care about that. I care about, do I feel the potential after 2 slides? And that's how most investors will probably make up their mind. Of course, then let's have a look at the business model. Critical. How are you going to make money? Of course, you can change your business model over time because the world is changing fast. So you will have to pivot probably. That's okay. The team. It's okay if your team is not complete, but you have to admit it. So, you know, tell me that you know that you need a sales guy because you are a technology person. So just tell us that. And at the end of the day, to protect the money, of course, as well, you must protect your idea, if possible. And you know, IP strategy doesn't mean only patenting. You know, patenting is just one of the 3 possibilities to protect your technology. And also, technology also means that there must be some magic in there. You know, investors go for dramatic changes, they go for disruption, they go for really big steps, not small incremental innovation. So that also must be in there. It's kind of hard to rank this because a lot of people tell me team is the key. No, I found out in my life investing in startups, it's not the team really. It's maybe one person of the team that makes the difference. And I'm always looking for this one person when I invest, by the way. All right. Now, I have a few more slides to share with you about other issues. We said at the beginning, it's all about, you know, you should also get support. And, you know, there are coaches out there, people that have, you know, experience, that have networks, that have insights. So you should really tap into that. Yesterday I just met with Dominique Gruhl from InnoSwiss, which is leading the startup department there at InnoSwiss. And she told me they have like 130 coaches for around 500 startups right now. So there are coaches available for you. As I said at the very beginning, I'm one of them. I'm a special coach. I only do pitching. I only do financial planning. And there are many great coaches out there. But the challenge is, if you have 130 coaches, which one should you talk to, right? How do you select your coach? It's very critical. And I recommend just to ask them 3 key questions. Just ask them. Are you an entrepreneur yourself? When you ask, are you an entrepreneur yourself? Have you ever done a company? Do you have your own company right now? Right? So you understand my issues as an entrepreneur. Second question, have you ever invested in a startup? Yes or no? Well, if the answer is no, I'm not sure. Have you ever won or lost money if you have invested? And even better if he lost some money, so he even better understands your pains and your issues. And if the answer is no, then it's the second no, so maybe he's not the right guy, right? But that's just a thought of mine. Well, financials. Financials, when I talk to these PhDs and all these masters and these brilliant people, it's like, oh, finance, we'll do it later. Well, I know it's the last chapter of a business plan. It makes sense to be at the end in the content of a business plan, because it's the summary of everything you write down. Every action, every idea you have in your business plan will translate in numbers at some point. But it's not a good idea to spend all this time and effort to build that without doing it right away from day one in parallel. It's not going to help you if you find out, I need 10 million to make 1 million of sales, so that doesn't, it's not investable. So start on day one also with the financials. Make your financial plan, even if it's a very basic, simple Excel sheet. You can scale up to get to more sophisticated tools that are available, but never forget, everything will translate into numbers, in financial numbers. So do it right away. Well, I have something very important to close. I'm almost, here, but this is really, nobody tells you this as a startup. And it's not even in textbooks, which, makes me a bit angry. I was even considering writing a book at some point, but I can share it today with you. I think this is probably the most important lesson of today. And you see, when you start your business, when you become an entrepreneur, this is what's going to happen. You're going to be a founder, a very proud founder, a very courageous founder. And at the same time, you're going to be an employee of the company. Even a founder is now an employee, right? And then, in addition to that, you are a member of the board. Now, you are kind of the center of the universe, right? And you feel really proud. I'm a board member. I'm a CEO. I'm a founder. Yeah, sounds great. But there is a problem here. There are 3 problems, actually. Each of this role brings a problem. Let's look at the problem. As a founder, I must tell you, you might just lose the money you put into your company if it doesn't go well. And we know not every startup will be a big success. It's not possible. We are starting up and then we figure out later if it's going to work. And we also recommend, and you have to separate your private life from your company life. So you will make a company like SARL or SR, which makes a lot of sense. And as we learned, you are the first one to put money into your company. Now, if it doesn't turn out well, you're just going to lose it. But that's all you're going to lose for the moment, right? So whenever you do a startup, it's like you buy an option that could eventually have no value. So let's be aware of that. So only put as much money into your company as you can afford to lose to keep your family life, to keep your kids, your house. You know, it's also value. Now, you're an employee, right? Well, if your company, if you lose your money as a founder, you're going to lose your job. That's basically what's going to happen. But now comes the problem. You are not eligible for unemployment money for a certain period of time. It depends from canton to canton, but it could be between 3 to 6 months. If you find out today, maybe it's important to know. And the reason is, from a perspective of the government, you took a risk to do a company, you self-employed yourself, so the government is not going to take that risk of you employing yourself. I think it's quite fair to do it this way, but you must be aware of it, that you don't get immediate unemployment money if you are an employee and a founder at the same time. That's the condition. Every other employee of your company will get this money immediately. So it's really about you, right? Remember, you're the center of the universe. And now, the worst part. Because you figured it's good to be a board member. Well, I don't like to be on boards. I must confess. I don't like it so much. And what is happening is that if you go bankrupt with your startup, and there are still some debt, normally you learn that you don't have to pay back the debt. That's what we tell you. And that's what's kind of, written or clear. And that you're going to lose your equity. We said that before, the founder. But if you have debt with governmental agencies, like value-added tax, like tax in general, like AVS, like pension fund, they're going to knock on your private door to collect these open invoices. So as a board member, I must tell you, be careful about invoices related to governmental agencies, including, in addition to that, mandatory insurance for BVG. So be careful about that. And I know this sounds like tough, but that's the reality, and you must learn it. To close, I recommend the following support organizations, beside, of course, Microcity. I mean, we're doing the talk here at Microcity, so it's quite clear. But I recommend InnoSwiss, which is the federal support. You can have money there, grants. You can have coaches there. I recommend Venture Lab. You can learn a lot. They're also connected closely to InnoSwiss to provide you with some knowledge. I recommend StartupINVEST, my organization, of course, because we have been around for 17 years and we have done events for so many years now. And most of the companies that, today you all know, like Get Your Guide, Doodle, many others, they all pitched at our events. So it's a good platform to pitch to investors. And at last, if you want to learn more about the ecosystem, if you want to understand what's going on a daily basis, there's no better portal than the Startup Ticker. So check it out. So this was it from me. I would like to thank you for listening to this. And I'm looking forward, of course, to meeting some of you at least. And I'm very thankful for Mark to give me this opportunity to be here today. It's always a pleasure to give this kind of talks and to kind of hopefully help you on your journey as an entrepreneur. Thank you very much.